In this video, I'm going to break down where we are in the crypto cycle today, why money could be flowing into altcoins in the very near future, and how I'm positioning for that based on fundamentals. Now let's get into it. To start, let's understand the background of where exactly things sit today. If we look at the Bitcoin price, it sits at just under $118,000 as of the time of making this video. This is actually a drop from a few days ago, but it's up massively from where it was at any other point in history after consolidating below its all-time high for a few months. It firmly broke out, and this comes amidst the backdrop of a few important things happening. You have regulatory clarity coming. We have two important bills that were passed in the United States Congress this week. One's going to be signed and go into law. The other one still has to be passed by the Senate. And then also you have fundamentals better than ever. You have traditional finance institutions getting in. You have real usage, and that includes non-speculative usage of digital assets. And in the case of Bitcoin, you have a dollar that's being devalued by money printing. And so a lot of that excess liquidity is being soaked up by Bitcoin. And then if we refer to our Wall Street cheat sheet, this is a good framework to help you think about market cycles. The psychology of a market cycle, things traditionally go from hope to optimism to belief to thrill to euphoria, followed by small crash, complacency as people think we're getting ready for the next rally, and then things go downwards to consolidate for maybe a few years before the next rally. And so where are we in this? Because this is a pretty good framework. My gut says, now I know there's people who are going to say, oh, it's hope, it's optimism. Look, we're coming off of several years of solid price action. My gut is that we're probably somewhere between belief and a thrill right now. If you zoom out, we're going on multiple years of strong Bitcoin price action with some dips, some consolidation along the way, but multiple years. I think we're past people recognizing the rally is real, and there are truthfully some top signals, like some of the corporate Bitcoin treasuries that have been launched recently. However, I don't think we're at euphoria yet. And there's a few reasons why I think that. And so what I'm going to make the case next is why I think we're not in euphoria yet, and why I think that when that euphoria inevitably comes, or when it likely comes, nothing is inevitable. When it likely comes, that's when you're really going to see the best performance in alts and what to look for before then. So the first thing is, if you look at funding rates, open interest, and we can look at this over the past year, you don't see a broad increase in open interest across Bitcoin majors and altcoins right now. Similar to what you saw in December, right? In December, you saw that huge surge in open interest coinciding with a local top for Bitcoin. We don't have that now. In fact, it barely registers on the chart at the moment that there's anything out of the ordinary going on. And so you don't have that buildup of leverage, and that decreases the chance that we get a major wipeout. And it's also a sign that the market, people aren't fully invested as much as they could yet, because they're not using as much leverage as they did even in December. Furthermore, if you actually look at on-chain volumes, so trading of altcoins on-chain, typically this is something that has a huge spike during peaks. If you look in the spring of 2021, it had a huge spike. Later in November of 2021, it had a spike. Even if you look at the top in January, coinciding with the launch of the Trump coin, it had a peak. You don't really have any kind of peak recently. You have sustained growth. This is what I talk about with growing fundamentals, right? You have the average week today would have been one of the best weeks ever in the past, but you don't have any sort of local peak that's noticeable even on the weekly level. And what I would expect is, when we actually truly get a mid or longer term top, I would expect some sort of surge in trading activity. Now, that being said, I do think there are some signs that we could be due for a dip. So this doesn't mean go buy on leverage now. In fact, I would say if you need to be seeking guidance at all, don't ever go buy on leverage. But We are probably due for some sort of correction because we had this incredible rally. And also, if you look historically at Bitcoin returns, we were having a historically good summer so far. This is only the third time ever that both June and July have been positive. Knock on wood, July's not over. But there's actually only been one time ever that June, July, and August were all positive. And that was in 2017. So perhaps this is 2017 take two, but historically August is one of the more red months for Bitcoin, and so is September. So I think that there's a good chance that we get a correction in the near future, and if we do, that's your opportunity to buy in if you are not already. And a huge part of the reason why this cycle still has fuel left in it is that the money is still flowing in, right? Money is entering, prices typically go up, and a lot of that money is coming from ETF inflows. If you look at, for example, the inflows on Bitcoin and Ethereum ETFs, Ethereum ETF inflows are stronger than ever. Bitcoin ETF inflows, July will probably be the strongest month ever. And so that's money that's entering, and in many cases, it's money that's entering regardless of other factors in the market. People are DCing into these ETFs in their retirement accounts, and I understand some of the concerns that purists might have around this creating some sort of centralization risk, especially in the case of ETH, or around you're not really holding the crypto. Regardless of the merits of the actual ETFs themselves, it is having an impact on price, and it's having an impact on price that's creating sustained buying pressure. Additionally, stablecoins are growing like crazy. Over the past 30 days, the stablecoin supply has grown by $8.87 billion, or 3.5%. And if you don't know, stablecoins are basically crypto that's pegged to a fiat currency, and in most cases is backed by a cash or cash equivalent. And to add more fuel to the fire, US Congress just passed a bill creating a regulatory framework for stablecoins. So the result of this is that you already have stablecoins growing, and now likely you're going to see stablecoins grow even more. And in fact, the Secretary of the US Treasury, Scott Bessent, recently predicted that the total US-backed stablecoin supply would approach $3 trillion in the next few years. And like we saw a second ago, it's currently at $260 billion. That's already big. 3 trillion is more than a 10x from there. So you're going to potentially have literally trillions of dollars entering, and trillions of dollars entering the stablecoin market is more significant than the rest of the crypto market cap going up by trillions, because that's actually real money, right? It's not fake market cap that's driven by low liquidity on order books. It's actually real money that's entering the system, and the new regulatory framework guarantees that those stablecoins that are being created will be fully backed. Additionally, the US House just passed another bill this week called the Clarity Act, and this creates a regulatory framework for digital assets. They're saying they want to make US the crypto capital of the world. As I live in the US, I would welcome that. But the important thing to know with this is that this divides the oversight between the SEC and CFTC. SEC being the branch that regulates securities, and CFTC being the regulator that handles commodities. So it sets up some framework for differentiating which cryptos would be commodities versus securities. Now, I understand there are some people who would prefer that they be classified as their own third thing. That's neither of those. But I think clarity is good, because clarity means that founders don't have to guess, right? They no longer have to guess on whether their token is a security or not. And so now that we've established some solid reasons why the market is likely to continue to do well, why the fundamentals are strong, how to position yourself in this cycle, how do crypto cycles actually work? So let's jump back into prices real quick. We talked about Bitcoin doing well, but what's started to play out over the past few days, and I think this is the most significant thing here, is that money is rotating from Bitcoin to other majors, and this is what always happens. So Bitcoin went up. Bitcoin market cap is now $2.4 trillion. There are now people who either missed Bitcoin or who bought Bitcoin and made a lot of money, who are moving down the risk curve to seek higher returns elsewhere. And they start by going to the majors. That's why you have Ethereum up 21.6% in 7 days, and XRP up 26.1% in 7 days. Even something like BNB and Solana, you can see those are also outperforming Bitcoin over most time frames, as they act as beta to it, and also as people rotate money downward. And so that's like the first phase of money rotating to alts. It rotates to the majors. And then what happens? You have people who either miss these, or again, they get these and they don't have the returns they want. So then they start to get down to the juicier altcoins. They get down to ones that are outside the top 10. Maybe they get down to some that are outside the top 100. If you're really adventurous, you get to some that aren't even listed on a site like CoinGecko that are on chain. And basically that's how crypto cycles go. People rotate money down the risk curve until eventually they're so risk on that there's no one left to buy from them, and then the whole thing crashes. And by that point, you want to be way out of the market, right? By the time people are buying coins at $50,000 market cap, hoping that it goes to $1 million market cap, you want to be gone. You want to have cashed out. I think the best time for opportunity is when you have people that are starting to rotate to coins that are $1 billion market cap that they're hoping can go to a few billion. And if you can choose ones with the strongest fundamentals and the strongest narratives, then maybe you can ride some of that wave. And I can already hear the question that everyone's asking, but which altcoins should we buy? I'm not going to tell you that, because you need to do your own research. You need to understand your own risk profile, your own theses about the market, or else even if you buy the right coins, you're going to sell them too soon or hold them too long. But I am going to share the ones that I like that fit with my theses and why, but I'm not suggesting that you copy trade me or buy these same ones. And before I get into those though, reminder that I have an awesome weekly newsletter at newsletter.dynamodefi.com, where we give you everything you need to know about the crypto market in about 5 minutes every week. So readings, on-chain analysis. We've actually got a new market overview section coming soon that's going to give you an overview of where the market sits today. So check that out. Link in the description, newsletter.dynamodefi.com. All right, so back to alts. Which ones do I like? I like ones with strong fundamentals. And so first of these, it's actually much higher than it was when we first talked about it on this channel. I made a video a few months ago saying, why I think Hype will do well this year. But Hyperliquid, reason being, Hyperliquid is the closest thing to a DeFi competitor to Binance. It has extremely strong perp volume, the strongest by far of any perp DEX. And it's actually starting to give centralized exchanges a run for its money. On top of that, it also has its own layer 1. It has the Hype EVM that has a growing number of applications, and I think is probably the best airdrop farming environment since Solana 2023. And all these things compound into each other in a flywheel. So Hyperliquid's already done well, but it's one of my favorites. Sometimes it's better to just stick with your winners. And by the way, one general philosophical thing I'm going to say here compared to how I've played previous cycles, I'm really trying to stick with the strongest fundamental projects this cycle, because I looked back at my performance from 2020, 2021, even 22, 23, etc., 24. And typically the vast majority of my returns came from finding coins that were unique, that had good teams, that were not necessarily the smallest, that went to being billions and billions of dollars, but that were already strong performing coins that just continued to do well because winners tend to keep winning. So I'm trying to focus on that more this cycle. Hyperliquid fits that profile. Another token that I really like is Aave. Why Aave? Aave is the largest crypto-based lending platform. And if we actually take a look at the fundamentals on Aave, Aave currently has $31.8 billion in deposits. All-time high by far. It's generating tons of revenue, millions of dollars a month. And it's really the closest thing to an on-chain bank at the moment. And I think that as bigger money enters the DeFi space, these network effects that Aave has established by basically winning the race to be the largest lending platform in DeFi, I think they're just going to accelerate. And it's very easy to imagine a world where this $31.8 billion suddenly becomes $100 billion, $200 billion, $300 billion. I know that sounds extreme, but if you believe like I do that huge parts of the world's financial system are going to move on chain, then which platforms are positioned to capture that? And the one that already has the strongest network effects for lending is pretty well positioned, perhaps the best position. So Aave is one that I like. Outside of the DeFi space, I liked this years ago, but I still like BitTensor as well. BitTensor, they've built something really unique in terms of applying Bitcoin's tokenomics model to incentivize the solving of different artificial intelligence related problems. It's also a very strong narrative, right? To say you're using crypto to make decentralized AI. A lot of really smart people involved with the project, and it's pretty far off from its all-time high right now. However, in the event that retail investors do come back in large numbers, I think the quote Bitcoin of AI, or the AI Bitcoin, I really think that's going to be a powerful narrative. And to my point before, they've created something unique, and that's what we're going for. And then another one that I like that's a little bit riskier is Cato. So Cato is a really popular app right now for tracking the social engagement of different products. And what I like about Cato is a couple things. First off, they're selling data. Data is a extremely lucrative business to be in, and I think that it's actually one of the best use cases of crypto. If you look at the use cases that have broken out into mainstream, like prediction markets, like several other apps that relate to aligning incentives on data, it's actually proven to be like one of the better use cases of crypto. And so apps that use token incentives to better collect and distribute data, I think are going to I think they're going to do well, and Cato is the leader in that respect. It also has a play with the creator economy, because what Cato does is it basically creates a social graph to track who's getting the most engagement when talking about different projects or companies, but also how good that engagement is, like whether they have a lot of smart followers or whether they have fake followers, etc. And I think that that's solving a real problem related to key opinion leaders, not just in crypto, but in other industries as well. And it's possible that Cato will be able to bridge that gap to being a data service with a much larger total addressable market. So I consider this one to be riskier, but I think that it's pretty interesting. And it's also been one of the larger projects in terms of mindshare on crypto Twitter this year. So if you have a lot of new people coming in, I would expect a lot of them to start to ask you, what is Cato? And then they may buy it. I've got a lot more video updates coming in the near future, so if you want more like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.